Welcome back to my channel. Landlords across the UK are about to experience one of the most significant changes to property taxation in over 10 years. This shift impacts everything, from how you report your income to what expenses you can offset. And if you're not aware of what's coming, you could end up facing penalties that run into the thousands. This isn't about creating fear, it's about being prepared. These changes are being introduced by HMRC and will be mandatory, so understanding them now is essential. To break it all down, I sat down with Nadim Razik, a chartered accountant and head of tax at Provest. He supported thousands of landlords in managing and reducing their tax liabilities. In this video, we'll go through exactly what's changing, what it means for you, and how acting early could actually help you reduce the amount of tax you pay. So, let's start with the basics. The system is called Making Tax Digital. But what does that actually involve? In simple terms, Making Tax Digital, MTD, is a new way for HMRC to collect information about your rental or self-employment income. Instead of submitting one tax return per year, something most people are used to doing by the 31st of January, you'll now be required to send updates every quarter, and everything must be done digitally. This applies to landlords and sole traders earning above a certain threshold. From April 2026, anyone earning £50,000 or more will be included. The major shift here is moving away from the traditional once-a-year system to 4 submissions per year, with deadlines set shortly after each quarter ends, similar to how VAT reporting works. Another key change is that you'll need to use compatible software. Paper records and manual submissions won't be accepted anymore. All your bookkeeping has to be digital and submitted electronically to HMRC. So yes, the days of keeping receipts in a shoebox are effectively over. Now, an important clarification. Although you'll be reporting every quarter, you won't actually be paying tax 4 times a year. These submissions are purely for reporting your income and expenses. Your final tax bill is still calculated at the end of the year. The rollout of MTD is being phased in gradually. It starts with those earning £50,000 or more from April 2026, based on their 2024 to 2025 income. Then from April 2027, it will apply to those earning £30,000 or more. By April 2028, the threshold drops further to £20,000, meaning the majority of landlords will fall under the system. There's also an important rule to be aware of. Once you enter the MTD system, you're required to stay in it for at least 3 years, even if your income later drops below the threshold. So even if you're not affected immediately, it's still something you need to start paying attention to now. You might be wondering, if you haven't received any communication from HMRC, does that mean you're not included? The answer is no. You still need to check your situation yourself. Receiving a letter is not a requirement for being part of MTD, and in many cases, people who should be registered haven't received any notification at all. The responsibility to register lies with you, not HMRC. At this stage, it's likely that most landlords will eventually be included in this system. There are a few exceptions, though. Limited companies are not currently affected, and there are no immediate plans to bring them into MTD. The same applies to partnerships and LLPs for now. However, if you personally own a property outside of a limited company, that income is assessed separately. Even if most of your portfolio is in a company, a single personally owned property could still bring you into the MTD system if the income meets the threshold. Also, if you co-own property, say with a spouse or family member, HMRC looks at your individual share of the income. So if a property generates £60,000 annually and is split 50-50, each person is assessed on their £30,000 share individually. Now let's talk about working with an accountant. If you already have one, it doesn't automatically mean everything will be handled for you. You need to have a conversation with them as soon as possible. Ask whether they will register you for MTD, whether they'll handle the quarterly submissions, and what responsibilities will fall on you. Also, clarify the costs involved. This is an additional compliance requirement, so there may be extra fees. And don't forget about the software. Will they provide access, or will you need to arrange that yourself? Even if your accountant manages submissions, you're still responsible for maintaining accurate digital records throughout the year. One practical step that becomes even more important now is having a separate bank account for your property income and expenses. Mixing personal and property transactions will only complicate things, especially when everything needs to be tracked digitally. Another key point, this isn't just about reporting a final number. You need to record every single transaction, income, expenses, repairs, insurance, mortgage interest, everything that goes into your property finances. Speaking of mortgage interest, this can be slightly tricky. Many landlords rely on annual mortgage statements, but under MTD, you'll need to report figures quarterly. If exact figures aren't available, you may need to estimate based on your bank statements or request more frequent updates from your lender. The goal is to be as accurate as possible, but small discrepancies aren't critical at the quarterly stage since no tax is paid at that point. Everything is finalized and corrected in your end-of-year submission. Now let's briefly touch on software. HMRC has encouraged the development of some free tools, but in reality, most landlords will likely need a paid solution. Property accounting can get complicated, especially with multiple properties or shared ownership. There are platforms designed specifically for landlords that handle these complexities, including mortgage calculations and ownership splits. These tools typically start at a relatively low monthly cost and can simplify the entire process, whether you manage your own accounts or work with an accountant. So what should you be doing right now? First, speak to your accountant and understand how MTD applies to you and when. Next, choose suitable software and get it set up if you're affected from April 2026. Make sure you're properly registered with HMRC for MTD. Again, confirm whether you or your accountant will handle this. From April, start keeping digital records immediately. Your first quarterly submission will be due in early August, so that's an important date to keep in mind. If you're not affected until 2027 or later, don't wait. Start preparing now. Explore software options, understand the system, and consider adopting digital habits early so the transition is smoother. And if your income is currently below the threshold, keep monitoring it. These limits may change, and it's likely that more landlords will be included over time. Getting organized early puts you in a much stronger position and avoids last-minute stress when the rules eventually apply to you. Now that you understand what's changing and how it works, the next question is, how can you legally reduce your tax bill as much as possible? That's exactly what we cover in the next video.